Hello, friends. Kristin LaVanway coming to you from Mesa, Arizona. It's a beautiful sunny day here. And hey, I realized I haven't been on YouTube in a while to talk about Phoenix real estate, what's going on in Metro Phoenix. So I thought I'd chime in. There's been a lot going on lately, a lot of confusion, a lot of bad news out there. And I got to tell you, it just doesn't look that bad from where I sit. Definitely shifting, but isn't that always the case in Phoenix real estate? So let's just dive into a couple of charts. I think that will illustrate pretty well what is happening in our little fair town. So I like to follow Michael Orr, who does a Cromford report. We're very lucky here in Phoenix to have this guy. He's a statistician who studies the market. He's been doing it for over a decade. And it's just a lot of information that really highlights what's going on in the market. So he's created an index that's a 3 to 6 month look ahead at what's happening in the market. It takes a look at what our activity level is, what our supply level is, and makes a prediction as to where things are headed. A market index of 100 is a balanced market. And you can see that back in October, we dropped below a balanced market. It actually was a buyer's market for 4 weeks or so. And then at the end of November, things started to take a shift. They started to shift back into the direction that favors sellers. So we're in technically what would be considered a seller's market, but this Cromford Market Index was like 400, 500 in some cities, even 1,000 in some cities. It was out of control, seller's market. So what we're seeing right now could barely be considered a seller's market. What we're really talking about here is more of a balanced market. So this is a look at the Cromford Market Index way back in the early part of the year 2000. And you can see that a lot of the times it's dancing right along this balance mark here. We've had a couple of times where it was higher and a couple of times where it was lower. I think we all remember this time period here, 2005, 6, 7, 8, as we were recovering from the housing crash. And then, of course, things went out of control here in 2020, 21, even 22. But it's back down into a balanced market. Now, what does a balanced market mean? Well, when the market is exactly balanced, it means that home prices will go up to match inflation. Right now, inflation, we're battling inflation. We're not going to talk about inflation here, but house prices will go up at the rate of inflation. So that it's not like prices are going down. They're not really staying the same. They're just keeping up with the cost of toilet paper. Now, they're not even the cost of toilet paper and eggs. It's just the balance. They're going to go up a little bit. So what's happening as this market shift is happening, you can see back here in the early part of 2022, we had a very low inventory. This chart shows our listing count. So how many homes are on the market, actively on the market. And we like to see 20, 25,000. That's normal for Phoenix. But back in the beginning of 2022, we had 4,000 to 5,000 active listings, which is, ridiculous. That's why people were lined up around the block and there was 50 offers on every home. But interest rates went up. That was a big change. Interest rates went up and the house prices had been going up, but the interest rates being low is like, okay, well, we can still handle this. Well, it was just like the last straw for buyers. And so they started checking out and the inventory started to increase. So we saw a huge increase in inventory over the good part of 2022. It peaked there in the November timeframe, and it's been coming down since then. It looks like it's kind of leveling off. So that's just another sign that we're looking at balanced market conditions right now. It's still a little low, honestly. Supply level is still a little low. I think we have about 75%, 75 to 80% of the listings that we need to serve the Phoenix metro area. But it's a lot better, 16,000 homes is a lot better than 4,000 homes. I think everyone will agree to that. So year-to-date sales. Now this is just looking at sales back. It's from January to where we are right now. That's this line right here. This is our 2023 sales volume. You see, it's really low. You can also see that it's come up some, it's coming up, but it's low compared to 2021 and 2022. It's definitely lower. But here's what I think is interesting. So this is 2014. Remember when I showed you that chart, we had a balanced market back in 2014. That was the last time we really saw balanced market conditions. And our sales volume is sort of tracking those 2014 numbers. So would I expect to see a major change in our sales volume? Maybe not. Maybe not. If we're looking at balanced market conditions, we've got the iBuyers kind of checking out right now, where investors are checking out. This is like the conditions we saw back in 2014. This might be what we're looking at for the rest of the year as far as sales volume goes. Now, this lower sales volume doesn't help sellers. They're not going to love this. But what does help them is the listings under contract. So that is on the rise. We are seeing some increased activity from buyers. And our listings under contract's actually gone up 32% since the beginning of the year, which is faster than it usually goes up. It is still lower than we've seen in the last 2 years, which might be disappointing for sellers, but still it's headed in the right direction. Now, listings under contract, at the beginning of our buying season, that's where we are right now, the beginning of the buying season, usually it increases through April or so, May, and then it starts to level off depending on, now this was 2022, so it really leveled off. Usually doesn't level off that much, but that's what we expect to see. It will be interesting to see the next couple of months how this whole peak goes. If we hit the peak, if it does have a different pattern, it'll be interesting to see, I think. So here's another look at listings under contract, just a different perspective. It's comparing it year over year. Notice this dip here in 2018, 2019. So back at the end of 2018, affordability dipped below acceptable levels. Like it was below the 60% mark in this metric. And basically home buyers was like, you know what, I can't afford a home. So they took a break and then sales volume went down. Then, interest rates were improving, everything was turning back around, and they started to get back on the train again. Then we had the pandemic and listings under contract dropped dramatically. Pretty much everything just shut down for 2 months, from March through May. Everything just kind of shut down. Once this, doors opened back up again, we started to see the houses going back under contract. But then it was just like everything just came to a head. Interest rates went up. Prices were still going up ridiculously. Buyers are just frustrated. And so they started tapping out. And that's what we saw from 2021, 2022. Everything just took a dive. And then you can see that at the end of November, we started to see an improvement again. So that's kind of where we are right now. Buyers are coming back on board. Now, what also is helping sellers and what's keeping those listing counts low, despite the increase in sales activity, homes going under contract, is that our new listing counts are way down. New listings are down, they're down 22% compared to last year. And it looked like they were going to, this January, they're kind of catching up, but around the end of January, you can see everything just leveled off. And so if you just look at February, we're actually over 40% below where we were this time last February. So sellers, they're in no hurry, okay? Sellers are in no hurry. They're under no pressure to sell. They have a ton of equity. And if they don't like the way things are going, they're just going to sit it out. All right. So the things that are really driving our market right now are supply and demand is hugely tied to interest rates. And yes, interest rates were up above 7% in November timeframe, October-November timeframe, which is why everyone's like, you got to be kidding me, 7%? No way, I am stepping out. But, everything started to look a little better. It looked like the Fed was getting some ground on the inflation situation, and rates came down. They actually dipped to 5.99% using the one index that I'm following, the Mortgage News Daily Index. But everyone got the jitters. The Fed's like, I don't know if we're doing enough. And rates popped up to 6.45 this week. They're back down to about 6.39 on this metric. And so we're going to just see. But it looks to me like we've had such a precarious balance in our market that it's this little bit could really slow things down. The main message I want to put out there is you're going to hear all this gloomy doomy stuff from the news outlets and people on YouTube, all these pundits, you know, the market's going to crash, prices are going to crash. There's really nothing that you can see. You saw what's going on as far as where the sellers are, where buyers are, that's going to precipitate a big housing crash. Now, could things change in the future? Sure, they could. But based on what we are seeing right now, there's nothing to indicate the prices are going to take a crash. What we saw in 2022 was about a 15% price correction from the beginning of the year till the end. Prices basically went back to the beginning of the year. Wherever they were in January, that's where they were at the end of the year. And honestly, it was such a heated rate of appreciation that doesn't sound really a shocker that something had to give. We are seeing a little leveling off of that, and everything indicates that probably we're not going to see much in the way of price changes this coming year. Will they go up and down a little bit, based on normal norms? That's probably more what we'll see. So I'm going to keep checking back with you every week and filling you in on what's going on. It should be a fun year to follow. It should be like a little bit of a fun roller coaster ride. Not too scary, I hope. If there's anything I can do for you, any questions you have, you know where to reach me, Kristin at hereinphoenix.com. Go out there and make it a great day.